Stephanie, this is a big deal. You've been in this job for a few months. This is the first big rollout.
Yes, we're thrilled to announce Launch with GS. It's our first investing initiative with a gender lens, but it really builds on our longstanding commitment to women's economic empowerment. And what we're doing, as you said, is we're going to commit $500 million of firm and client capital to close what is often referred to as the gender investing gap, which is simply that women are not getting the capital that they need or deserve, but punctuated by the fact that there's a lack of diversity in the investing community. And we think that this allows us to do what we do best. It has three main things, which you talked about, and we're most excited about the ecosystem because in addition to wanting to put our own capital out there and client capital out there, we want to build the pipeline so that it's not 36 times next time.
Right. So talk about the capital, though, for a second. So part of it is your own merchant bank that's going to wind up giving money to VCs that are founded by women, for example. The other part is raising capital that you're going to then give to funds of funds that are managed by women. How are you going to split the allocation?
Sure. So let me talk about exactly what we're going to do. So we have a bunch of investing businesses, and actually we have 12 senior women who have almost 200 years of investing experience who are going to lead this initiative. And it's our investing businesses across the firm, and they're going to invest in women-founded, owned, and led businesses. The second thing we're going to do is we're going to raise client capital to invest directly in funds, and whether that's venture funds or private equity funds, but we're also going to seed managers because only 2% of private equity funds in the U.S. are founded by women. So we need to build that pipeline. And the last thing we're going to do is build the ecosystem to help all of that.
Right. So same question on the allocation of the $500 million. Is it split? Do you have an idea of how you're going to split it? Do you want to raise more than that? Give me a sense.
So we're going to start at $500 million. We're going to raise client capital. If we happen to raise more capital than we expect and we think we can put it to work, that 500 is not a ceiling. And the other part of it comes from our balance sheet. So we can be flexible with where we put that money. And you should look at the $500 million as a starting point and not an ending point, and we're going to figure it out as we go.
What kind of backing are you expecting to get for your funds of funds, the money that you're going to raise?
Yeah, we expect to raise capital from like-minded investors, and that includes both institutions and individuals. We have a very large private wealth management business, so we expect a bunch of high net worth investors. But in addition, we expect a lot of pension funds, sovereign wealth funds, really our institutional clients to be a part of this.
Are you at all worried that you're not going to have enough opportunity?
So as we thought about it, and it's very clear in our announcement, we could have said we're going to raise more capital than that because we do think there's greater demand than the amount that we've put out there, but we want to start and make sure that we do a good job. And the reason why we're seeding managers and building the ecosystem is so we can build that pipeline.
How many opportunities did you discover already through your 10,000 Women program? Because you've had that program for some years. It's been very successful. You work with a lot of entrepreneurs, female entrepreneurs, and business people. Did you find some prospects there?
I'm so glad you raised it. 10,000 Women is really the beginning of the insight and thesis behind this. And the 10,000 Women program you could view as the beginning part of the funnel, and this is the later part of the funnel, but it's not the last part of the funnel. It's really the entire Goldman Sachs ecosystem. So we are just at the beginning phases of going through all of the wonderful women that we funded in 10,000 Women, and we think it would be fantastic if one of those women were one that we ultimately were able to fund. If you looked in my email and in my text and in the calls that I've received over the last couple of days, you'd see that there are tons of women, whether they're from 10,000 Women, whether they're women that we've funded in other parts of our firm. We really believe that this is starting and a continuation of the movement that a lot of people are really supportive of.
And of course, this is sort of the next phase of your career. But before, you were basically the global head of financial sponsors for Goldman Sachs. So you have a good read on M&A and what's coming out of the pipeline. What is your read on M&A right now?
Great. So the M&A market is quite strong. You only have to listen to the TV to see how strong it is. And the conditions of why M&A is strong, whether that's conducive financing markets or the fact that there's lots of change in the sectors and in the world, and large deals that happen tend to bring across more deals. Our expectation that the M&A market is continue to be strong. We're going to watch everything that's going out in the world, but the reality is that companies and businesses feel like doing M&A is the right way to help them continue to grow and adapt to change.
And part of that, at least, we're certainly seeing in the media space, is disruption. I mean, you're seeing this in right now the Comcast versus Disney going after the Fox assets. M&A is great. You get it done. It's terrific. It's particularly good for the bankers. When does it turn into workouts? Because sometimes people overpay for some of these assets and they can't deliver on them. Is there any concern that it's overheated?
Yeah, so I'm going to leave that actually to the professionals in terms of what they do every day now in terms of valuation and M&A. But what I would say is that M&A is just part of the toolkit. And as we think about the world more broadly and CEOs think about what they want to do, I think they view M&A as part of the toolkit. And what we see as advisors is that people only pay what they believe makes sense and when they look at the forward projections.
Going back to sort of your world of like leverage loans back in the day, we're seeing some underperformance there. I know you don't do day-to-day anymore, but in general, do you get the feeling that we're seeing a lot more supply because private equity is just going to issue some LBOs, or do you feel like there's something else going on there that's more macro?
Yeah, I think there's a lot of private capital out there. And we started this conversation talking about women not getting as much of that private capital. But the reality is there's a lot of capital out there. It's part of the reason why we're so excited about launch with GS. But we do expect private equity to continue to put capital to work. But you've seen the returns that have come out of private equity. And private equity has been a very good performing asset class. And as private equity does deals, they do more lever loans. But I think I'll just say what I said before. You have very smart investors making decisions both on the equity and on the debt side.